Hey, good morning. It's Mike Zschunke, Berkshire Hathaway Homes and Shift Fund Properties in Scottsdale, Arizona. On our way to Paradise Valley, Friday morning market chat. We're going to talk about residential, we're going to talk about commercial, and we're going to talk about the economy a little bit. Just real quick, we'll start with inventory. 11 of the last 12 weeks have been down. We're just down a little bit this week. We've got 1,250 single-family detached homes in Scottsdale. Right now, this morning, not a whole. I think there's like 5 or 10 less than last week. But this market, it's interesting. I feel like this dip is kind of turning. I said it on a Cromford report yesterday with Tina Tambor. She does a good job on the housing, and our listings are starting to get more calls, more activities. I'm seeing properties start to go under contract. I'm seeing properties that were off market come on under contract. Remember, you can bid on properties that aren't necessarily actively listing. Maybe they were canceled or expired. Those sellers still want to sell, and we've got that list, so we know what's out there. But anyway, accepted weekly contracts was up, kind of making a turn up since the 4th of July holiday. You'll see some promotions. We're starting to go into a slight seller's market. Not so much because of demand is, I will just say demand is pretty steady. Demand is there, but inventory is really dropping down now. So, I'm going to pull over here so I don't lose you in a minute. But demand is pretty steady. Supply is really dropping off. We had a lot of cancellations and expired this summer. So, school's back in session in Arizona. So we always see a little uptick here. So I feel like the market's just, kind of on that downturn, on upswing. And like I always say, whatever your business is, statistics tell us where we've been. But you get this feeling. You can feel where we're going with the industry, whatever your industry is. Paradise Valley, there was 194 listings at the end of May. There's 92 single-family detached homes in Paradise Valley for sale right now. Scottsdale was like 1,900, and I think we're about 1,200 right now, 1,284. So supply is down. We'll see a lot of those come back on the market in the fall. People think it's a good idea to take it off the market. I don't know how. I don't necessarily agree with that. They reset the days, but there's too much information out there. People are smarter than that. But, Paradise Valley, Chandler, Fountain Hills, Cave Creek's coming up again. We're starting to see a lot go under contract in Cave Creek. Scottsdale's always been kind of in that balanced market, which isn't a bad thing. We've just had a few years of insanity, I guess you would call it. So that's what everybody remembers. Remember, buyers markets are very short. Historically, they're very short-lived and usually see price drops 2 to 5%. Everybody remembers 2008 when Phoenix prices dropped 43%. It's not happening again. There's just many people moving here, population increase. But typical buyer's market, 2 to 5% on $1 million house, that's $50,000. Is that going to break you? Then you shouldn't be buying a house. And that's what we do. We sit down, look at the numbers. What works for you? I'm here to advise, educate, and get you where you want to be. But if you want to price your home still, you can't test the market. You really got to price it correctly. I saw somebody the other day. What do we have here? $100 bill. What are you going to give me for this $100 bill? If I ask $98, if I ask $103, nobody's going to bid on it. Nobody wants it for $103. It's worth $100. If I ask $98, I'm going to get a bunch of people looking at it. That's kind of, in simplest terms, that's how you price your home. You want to hit that market. You want to hit the market price even a little bit low. And there's buyers out there, they're waiting. They're sitting on the fence, starting to come off a little bit as interest rates were down a little bit this week. We're going to talk about that in a minute. But, it's a great time to negotiate just on this upswing in time. That's sellers that have been on for a long time and they're priced a little bit high. They're ready to negotiate. And houses that are off market, they still want to sell. So if you see something you like, let's pick up the phone, let's negotiate. What do we have to do on the sell side or the buy side to get it done? And like I said, the phone's been ringing this week, but you got to price your home right. We're always going to have the 5 Ds of real estate. What is it? Divorce, death. I don't like to say that one too much. Instagram blocks me then. Downsizing, diapers, and diamonds. You get married. So have kids. There's always going to be those life changes. So we're always going to see these transactions happening. And right now, sellers sitting on a lot of equity. They don't really need to sell. But if they want to sell, they're ready to negotiate. So, how do you want to get that property? Go see it. Go see it. Let's figure out the numbers and make it work. So, I don't know. It's pick up the phone and call. That's my favorite thing to do. Anyway, commercial. A lot of activity going on. Apple's going to invest a lot of money to get rid of their tariffs, I guess. And they're partnering with Amcor up in Peoria and TSMC up there, which we have a great listing up there. If you're in the $700,000 to $800,000 range, it's 15 minutes from the TSMC factory. It's a great property. Give us a call on that. But commercial, anyway, Apple's investing in Arizona. There's $33 billion being invested in a data center between Phoenix and Tucson. They're trying to get that. Costco's buying up land in the greater Phoenix area for future development. They see the growth. And, big companies like that, they spend a lot of money figuring out Starbucks. You see a Starbucks go in, that's going to be a popular area. Costco, they're buying land to bank for future development. Follow that on the commercial side. Dutch Brother Coffee, they purchased a building, their headquarters moving to Tempe, already contributed to their bottom line, and their stock price shot up. So, I always say own the real estate. I don't do a whole lot of commercial leases just because I don't believe in it. There's not a lot of money to be made in it. But Murphy over at AMOZ has got 4,600 square feet retail. It's a great property. He's a fantastic landlord. You'll be happy. So if you're looking for 4,600 square foot retail at 53rd Avenue in Bell, it's an up and coming area. There's a lot of things going on there. So you'll see all the new Starbucks and coffee shops. That tells you that area is growing. So 4,600 square foot there. I need about 1,000 to 1,500 square feet in kind of the same area, Moon Valley, for a hair salon. So again, I don't do a whole lot of leases, but call me. I'll put you in touch, and we'll just point you in the right direction. That's what we do. And again, we're here for long-term relationships. But commercial, this 100% bonus depreciation is huge. I had some good conversation with a title friend of ours. We're meeting next week to see how we can get out to these dentists, doctors, lawyers, small business. How can you're paying rent anywhere somewhere. You want your business to be long-term, so why not own the real estate, get the 100% bonus depreciation, and have some sort of saleable asset or some sort of income when you're ready to retire. So that'll be fun. We're going to work. It'll be a fun project. I've been doing a lot on that, and it makes sense to me. So anyway, the economy. There's a lot of bad information out there on the economy. Anyway, the economy's rolling along. Everybody's talking about Fed rate cuts. I'm hearing other agents talk about it. I'm hearing some mortgage people talk about it too. Rebecca Patterson was on CNBC this morning, and she said there's a big misunderstanding of what the Federal Reserve Bank actually does. They deal with an overnight lending rate. I can't say this enough. The Fed funds rate is an overnight lending rate between banks and the government. It's kind of like, I used to have a supervisor at Bridgewater Associates, and he always said, you step on the gas of your car. Your car just doesn't go. There's there's 1,000 things that happen before that car gets moving. That's kind of like the Fed funds rate. It's so far displaced from where you and I, our credit card, our mortgages, that's more based on the 10-year. And we had a 10-year auction this week and a 30-year auction yesterday. The U.S. issues bonds, United States Treasury issues bonds to raise money. They have a rate that they believe is going to be acceptable to investors. If investors don't jump into that, then they have to offer a higher rate to invest your money for 10 or 30 years, whether it's a foreign country, an insurance company here in the United States, and whatever doesn't get sold at that bond auction has to be bought back by the primary dealers, the issuers, the underwriters on Wall Street. Those are called primary dealers. They had to buy back 27% of this bond auction. Yeah, 27% of this bond auction. It's normally around 20%. We've even seen like 12 to 16% primary dealer buybacks on bond auctions. We had one the other day. So why is that? Foreign companies with the US dollar, and like I said, the bond market, bond pricing is very complicated. It's not just a simple, let's go, it has to do with, currency movements, cash flows between country. That's what Ray Dalio, that's how he built his models. And it's, the bond market is just what is a willing investor willing to invest his money in for 10 years. So we had some weak bond auctions this week, and that's really what I just wanted to touch base on there. But those rates, the Fed funds rate really doesn't matter to you and I. There's a very big misconception, and I hear it from a lot of realtors, like I said, and mortgage people, that they're waiting for September for these rate cuts. The last time the Fed cut rates was last September, and mortgage rates went up almost almost 75 basis points. So anyway, it's all noise out there. And what we do, we just sit down with you. What works for you? What can you afford? You're a ready, willing, and able buyer. Do you want to buy? Do you want to sell? Residential, commercial. We're here to educate, facilitate, and advise. That's what we do. If it has to do with real estate, we want the long-term relationship. And just pick up the phone and call me. There's a new trend, that I'll get an email or a text, or don't send me a message on LinkedIn unless it's because I won't see it for 2 weeks. But just pick up the phone and call me. Like, I'll get lots of texts. Can I call you? Are you ready? Just call me. My phone's in my hand. 90% of the time, I'll answer. So even if it's just a quick 1-2 minute conversation, 203-733-5877. And that's where that personalization comes in. That's where we differentiate ourselves. We're not here to do a lot of volume. We want to be the person that you think of when you think of real estate. So if we can help you get you where you want to be. So we're going to be in Paradise Valley today, and then we're going to go by the new Berkshire Hathaway office. It'll be interesting. I haven't seen it yet, so it's down by Gainey Ranch. So anyway, we'll check in if we see anything cool. Ask questions. Let me know what you want to see here, and have a great day. Be smart, be safe, and we'll talk to you soon. Thanks for watching. I appreciate it.